Hello and welcome to Analyst Hangout. I am Perpetual Fast and Repeater. Well, this beautiful Friday evening, I am joined by three gentlemen. I have Ambrose Omodio, the Chief Research Officer, Investitor Consulting Limited. He's right here with me in the studio. Thank you for joining us today.
Thanks again for having me.
Always. And virtually, I'm joined by Kasim Garuba Kurfi, the MD CEO, APT Securities. Thank you for joining us, Mr. Kurfi.
Thank you for having me.
All right. And we're also joined by Mukhtar Mohammed, CEO, Finance with Mukhtar. Thank you for joining us, Mr. Mukhtar.
Perpetual, it's a pleasure. I'm being here with the boss himself. It's intimidating, and so you let the boss
you don't have to be. I mean, you are good.
We're together, no problem.
All right, so we start with the stock markets now. Nigerian equities markets closed positive as the key market indicator advanced by 64.52 basis points. The NGX All-Share Index advanced by 0.1% to close at 44,396.73 basis points. And of course, we saw the reversal that started yesterday where we started having positives. But of course, are quite negligible if you ask me. But let's have your thoughts. What do you think is happening?
Actually, you remember I said that this week, because of the earnings that kicked off last week Friday, we expect a miss market, and that is what really has happened. But actually, the life of Airtel has really brought the market to where the market is today. I will tell you that was kind of a big hit on the market. The big cap like stock dealing for straight 3 days brought the market down with almost 30.2% down. But it's good that at this time investors are looking at not only the market all-share index, they're looking at sectorial indices to guide them to their investment, and also individual stocks that has a good fundamental and also positive technical analysis also to guide their decision. But for me, as the analysis has just kicked off, is for investors to look at why people selling Airtel. It's just not because Airtel is bad or the fundamental has changed, because the price and already in any season, have less than 2 months to end of the year. Again, for that, people are looking at where can I get a bigger dividend yield compared to what Airtel is giving. But Airtel dropping to this price become attractive for also some investors to take decision, but to take a position. But I believe that what we're seeing is called sectoral rotation, looking for where or which sector that has potential to sustain this positive trend. We saw what came from your cap, what came from Afra Prudential, the one that came from the utility sector. I talk of a grade. People are looking at where can I go now so that at the end of the day I will get a better return, knowing that we're already in an inflationary environment. For that, people are looking at one point to the other, and that is how to invest. You don't just because others are buying here, you must have what is guiding you in the market. For me, it's a good market, but I believe that we want to see more earnings, especially from those high cap stocks and the big banking sector, energy. That also changed the trend of the market. But I believe that we should not panic. I will tell investors that our market is still good. We are still in a positive terrain. But also, like my colleague asked me in the office, is this earnings going to save the market going to negative? I say yes, market will not enter negative. Already we've moved from around 27 down to almost 8 or 3% something down on the all-share index, but still market will likely close positive. Might not be as much as 10%, but still market closing positive this year.
All right, that's interesting. Well, Mukhtar, let's have your thoughts on that. Do you agree with Ambrose?
I think I have to drag down the market, but again, what I need to add is you need to look at the microeconomy and economic sides of the economy. The market cannot be separated from the economy. And again, you mustn't forget that we say this market needs a trigger. The trigger will come when the third quarter result comes in, and also if there's any other trigger that the market will need, will be that from the physical side. Is there any policy that would drive the market forward? So definitely, I totally agree with him. But just to add that, and like you said, I think it's a good entry point for a lot of investors when you are looking at the stocks that are there and their price as today, and if you calculate that with the dividend yield that you expect, because some of these stocks, I'm not sure they will pay anything different from what they paid last year. But when you compare the price that they were last year and the price they are now, it's a good position for investors to look at. And I think, like I said, the market needs a trigger. When those any result begins to come in, especially from the first tier bank, and also from a new bank that is trying to pull the stream. Maybe Fidelity Bank will be added to it, FCMB in the second tier bank. We could see a game changer. But for now, I think we'll continue to see those ups and downs, good opportunity to enter. And again, like I said the last time I was here, the investors that are playing the equity market as it stands now are not the normal investors. When I mean the normal investors, you're talking investors that are there for the long haul. What we have now, those that used to play the treasury bill space, because of the low yield they used to have, they come into the equity market. And some of them are exiting when they see good price, good exit point in the equity market to move into the fixed income money market, treasury bill and bond. And then when they see price again, they come into the equity market. So what we have are investors that are not there for the long time. So definitely will not enjoy the kind of bullish run that we used to enjoy when you have you have a foreign investor that is going to be there for the next 6 months, 1 year, and the market keep moving like that. But for now, I think we'll continue to see those ups and downs.
All right. Well, Mr. Kofi, let's have your thoughts before we move on to the other stuff we want to talk about today.
I look different.
Okay. Go ahead. We can hear you, Mr. Kofi. All right, I guess we are having a connection issue right there. Well, moving on, the Minister of Finance, Budget and National Planning, Dr. Zainab Ahmed. Absolutely. Well, moving on now, we are going to be looking at the NGX banking index. We saw that to a very large extent. They did well, especially some of the tier 1 banks. Despite waning sentiments in the Nigerian equities market, shares of tier 1 banks listed on the Nigerian exchange appreciated by 48.762 billion naira in the last 4 days. Notable among the gaining banks are Zenith Bank PLC, Access Holdings PLC, FBN Holdings PLC, UBA PLC, GTCO PLC, and, well, we have Stanbic IBTC Holdings mentioned there. A review of the banking index performance for the past 5 trading days showed the barometer that measures the performance of the banking sector grew by 5.62 basis points or 1.5% to close at 379.10 index points from the opening figure of 373.48 points. That was on the 17th of October. And now, in a related development, Airtel Africa PLC's share price fell for the 3rd consecutive day on Wednesday. Now, Airtel led the losers chart with a maximum 10% loss over 3 consecutive days, resulting in a loss of about 676 billion naira on Monday, 609 billion naira on Tuesday, and 548 billion naira on Wednesday. This represents a cumulative loss of 1.833 trillion naira. I'd like Mr. Omodia to start this conversation. What's happening?
No, actually, I said it when I was.
You already talked about Airtel, but of course,
for me, for the banking sector, this is the toast of the market. Even before now, before the new listing of the telecom industry, we're not seeing the utility sector. But the banking sector has always been there. Because one, this is the most consistent sector in terms of dividend paying, and also this is going to have the good volume that people can grow in and out, going to have trading, and these shares in that sector are very liquid and marketable. That is why activity there is always on the top. But I believe that the opportunity sector I presented before night, that before they release their Q2 number, those that paid into the dividend, also their prices were down. People were expecting, are they not paying dividend? But when results after the half year came, most of them beat expectation, even though some cut their dividend payout, but the numbers itself speak for them. And knowing that also within this period of almost 6 months, from the date we start increasing our MPR to date, this sector will benefit more from it. That's going to reflect on their earnings at the end of the day. Investors are also looking at, okay, given that this price is opportunity for them to buy, that's why we are seeing activities in that sector. And I believe that it will continue till the end of the year and even first quarter. Why? Because we believe that now they've increased interest rate from 11.5 to 13, from 13 to 14, 14 to 15.5. This also the banking sector will kind of renegotiate their loans and all those stuff. That will be more money for them. And not only that, you can see that where TP has moved from almost as low as almost 5 points to almost 13 now. And also, if they decide to go and put money in treasury bill, they want to make money. They're not like individual like you and I. They want to really look at where we can take advantage of return, because they are financial institutions. They have the money to play around. I see that is why investors are kind of repositioning their portfolio. As I said earlier, sector rotation, where I see that earnings will continue, because I tell you, in any market, either bear or bull market, price feed on what? Feed on earnings. And if earnings are positive, tell you that dividend positivity is there. And also there will be what we call sentiment, positive sentiment on that sector or individual stock.
All right. Well, Mr. Kofi, let's have your thought on this. The NGX Banking Index and, of course, Airtel.
Well, you see, for the Airtel, what happened in the Airtel is arbitrage. You remember that the price of Airtel in London exchange is half of the price of the Airtel in Nigeria, and they are the same Airtel. So people take advantage of that, rush into London, acquire more Airtel, and bring it to Nigeria. That would bring the price. You can see volume going, and I don't envisage Airtel going further down because the average now is less than 20%. And therefore, we'll see the reverse of it. People now acquiring more of Airtel are likely taking it to London to exchange and acquire foreign exchange. So we may see the rebounds back of the Airtel. As regard to the other sectors, I don't see much because most of them, they are 52 weeks low. So the only way is to go up. And this is likely what is going to happen. And I'm not surprised if from now to December, I see the index going much better than what it is today. And this is advice for the institutional investors and the individual to now believe in our stock and take position. Because even by the dividend yield, you'll get a double digit. So why should you go and invest your money in the fixed income when you can even achieve that one in less than 6 months? Most of these banks will declare dividend by March next year. So in 6 months, you are getting 15%. Why don't you do that? Outside the price appreciation. So I see the market rebouncing back and the Airtel will no further go down. And this is likely push the index to go up and close much higher than what it is today.
All right. Well, Mukhtar, let's have your thought. I'd like you to react to what Mr. Kofi just said.
I totally agree with him, especially in the area of the dividend yield and also capital appreciation. You know, that's what I was saying even before now, that it's always good for investors to look at that. If you are going to be in this market for the next 6 months, there's definitely no how that you won't gain capital appreciation, you won't get dividend yield. And not to forget that the election itself will come and will be a trigger for the market. Like I've said in your program, I think the 3 leading presidential candidates are the best that we've had for a long time. And again, economically, I think the market is going to really benefit from them. So definitely once we have a peaceful election, which has become the norms now, we always have peaceful election. So I definitely think we'll see the market rebound before that time. But again, we'll see capital appreciation. And then dividend, of course, like I said, I don't expect them to pay anything different from what they paid last year, with the exception of assets, which has paid 20 kobo instead of their normal 30 kobo. Others, I think, will still be very, very fine. So I think investors should be shrewd, look at the numbers, and then come into the market. Like I said, there's no better time than to be in the market, especially if you are a shrewd investor or you are a value investor, especially. There are very good fundamental stocks that are selling at their all-time low. At the point, GTCO was selling at 52 weeks low. So it was a good opportunity for those that were able to key into that. I think most of them have made even a capital appreciation of up to 10%, even if the price have not gone that further. But I think it depends on which side you are. If you're a risk taker, then you come to the market. But if you are somebody that is still looking at the microeconomy issue, you're looking at the exchange rates, then you want to go to the fixed income space. And like Alaji is saying, unfortunately, I think the exchange too have not helped their cause. They keep talking about they don't talk so much about the opportunity that's in the equity market. They are trying to come up with products and they're trying to divert people's attention to those products. Also, that also is not too positive for the equity markets.
All right, thank you so much. Well, we'll take a break now, and when we come back, we turn our attention to some of the earnings that have hit the market. Stay with us.